Hey, welcome, guys. It is Tuesday night, June 17th, in preparation for Wednesday, June 18th. We are going on to the next chapter in the book, Market Wizards, Interview with Top Traders by Jack Schwager. William O'Neill, The Art of Stock Selection. Um, Great opportunities occur every year in America. Get yourself prepared and go for it. You will find that little acorns can grow into giant oaks. Anything is possible with persistence and hard work. It can be done. And your own determination to succeed is the most important element. I like that by as the opening part of the chapter here. Um, Schwager asked, when did you first find an approach that worked? Halfway down through his answer here, he said, to buy stocks that are coming out of broad bases and beginning to make new highs relative to the preceding price base, you are trying to find the beginning of a major move so that you do not waste 6 or 9 months sitting in a stock that is going nowhere. I like that. After the consolidation, a breakout, so you're not trying to buy the bottoms or tops where it can consolidate sideways for a while. The M in CanSlim formula makes sense uh, since few stocks can buck a general bear market. However, that rule sounds easier in theory than in practice. After all, how do you tell the difference between a market top and a normal bull market correction? Um, and his answer was, um, sorry, top formations in the market's average occurs in only one of two ways. First, the average moves up to a new high, but it does so on low volume. And this tells you that the demand for the stock is poor and at that point, and that the rally is vulnerable. Second, volume will surge for several days, but there is very little, if any, upside price progression as measured by market closes. I think that's important as measured by market closes, not the volatility intraday. But if you have multiple days and the market's only closing up or down, 5, 10, 15 points, over a 3 or 5 day period, that's definitely something to pay attention to. In this later case, there may not be a pickup in volume when the market initially tops, since the distribution has taken place on the way up. Another way to determine the direction of a general market is to focus on how leading stocks are performing. If the stocks that have been leading the bull market start to break down, that is a major sign that the market has topped. Another important factor to watch is the Federal Reserve discount rate. Usually, after the Fed raises the rate 2 or 3 times, the market can start to run into trouble. Jack Swagger asked, when you believe that the general market has entered a bearish phase, would you advise going short rather than merely liquidating longs? And down into the paragraphs here. The best chart pattern to short is one in which a stock breaks out to the upside of its third or fourth base and then fails. The stock should be breaking down towards the low end of its previous base pattern on increased volume. After the first series price break below the base, there will usually be several pullback attempts. The prior base will now provide an area of overhead supply, as all investors who bought in that zone will be losing money, and a number of them will be eager to get out near break even. Therefore, pullbacks to failed price bases also provide good timing for short sales. Does the element of unlimited risk present any special problems in short selling? Asked Jack Swagger. William O'Neill's answer is no, because I never take unlimited risk. If I short a position, if a short position goes against me, I will be out after the first X number of percent loss. He has a percentage, I think it's a little bit high, but so I'm not even going to mention it here. Before you sell any stock short, you should decide the price at which you will cover that short position if a loss does occur. Swagger says, besides the CanSlim formula, which is critical to your stock selection process? Risk control obviously plays an important role in your overall strategy. Can you talk a little bit more about that element of trading? William O'Neill says, my philosophy is that all stocks are bad. There is no good stock unless they go up in price. If they go down instead, you have to cut your losses fast. The secret for winning in the stock market does not include being right all the time. In fact, you should be able to win even if you are right only half the time. The key is to lose the least amount of money possible when you are wrong. Some people say, I cannot sell that stock because I'd be taking a loss. If the stock is below the price that you paid for it, selling does not give you the loss. You already have it. Letting losses run is the most serious mistake made by most investors. If you are not willing to cut your losses short, then you probably should not buy stocks. Would you drive your car without brakes? And then this is that story about the turkey that I mentioned in the chat room there that I thought Dustin would get a kick out of. In my book, I repeat a story told by Fred C. Kelly, the author of Why You Win or Lose, that provides the best example I know of how the typical investor procrastinates when it comes to making a selling decision. A man has rigged up a turkey trap with a trail of corn leading into a big box with a hinged door. The man holds a long piece of twine connected to the door that he can use to pull the door shut once enough turkeys have wandered into the box. However, once he shuts the door, he cannot open it again without going back to the box, which would scare away any turkeys lurking on the outside. One day, he had a dozen turkeys in his box. Then one walked out, leaving 11. Oh, I should have pulled the string when there were 12 inside, he thought. But maybe if I wait, he will walk back in. While he was waiting for his 12th turkey to return, 2 more turkeys walked out. Oh, I should have been satisfied with the 11, he thought. If just one of them walks back, I will pull the string. While he was waiting, 3 more turkeys walked out. Eventually, he was left empty-handed. His problem was that he could not give up the idea that some of the original turkeys would return. This is the attitude of the typical investor who cannot bring himself to sell at a loss. He keeps expecting the stock to recover. The moral is, to reduce your stock market risk, stop counting turkeys. Okay, this is Jack Swagger says, okay, you use your CanSlim method for selecting stocks and your 7% rule. Okay, there it is, the 7% rule for getting out if you're wrong. How do you decide when to liquidate a winning stock position? William O'Neill says, first, you should hold a stock as long as it is performing properly. Jesse Livermore said, it is never your thinking that makes big money. It is the sitting. Secondly, you have to realize that you will never sell the exact top. Therefore, it is ridiculous to kick yourself when a stock goes higher after you sell. The goal is to make substantial profits on your stock and not to be upset if the price continues to advance after you have gotten out. I know that's the same sentiment that Linda has echoed many times. Linda Raschke has echoed that same thing. So, all right, we're going to jump into this. I have up here on, nope, I don't. Here we go. Here's the 1440-minute chart. We are in this breakout, 3-bar breakout where we had the lows here, the highs here, and then today was a inside bar. Matter of fact, it was inside bar and it was a narrow range forward bar. So we're on a breakout mode off of a narrow range forward bar. I am just going to show this for caution on the daily here on the Keltner, the LBR. This pattern again, just keep monitoring this. We've talked about this. We've shown that before. Be careful going overly short as long as this pattern persists. We've had a bounce off the 20 period moving average here, one here, and the latest one's right here. We haven't really failed that significantly or taken out these prior lows, but it does look like we're getting a little bit of a potential rollover here after this prior high. But we are kind of holding this pocket here so far. So we're just going to keep an eye on that. 240 minute. That's what was up there. Okay. So this is the 240 minute. Did want to show, we kind of had this large move up, this move back down. Now it's kind of almost a wedging pattern up there, as you can see by the price action. We're going to see how that resolves. I wanted to point out again the support resistance lines. This was that prior resistance. This was that middle, the 4650. And I want to say that 4650. No, that was on the last month's contract, so we won't even talk about that. But anyway, we have these potential zones here, and then we have this other zone here. So I went ahead and marked here the 3 bar that I pointed out is down here at 59.79. The top of it here is 61.09. So we're still within that 3 bar as long as we play within here. We can come back down, move down closer to the bottom here. We can also, since we're in the middle, we can move back up toward the top. Any of those things can happen tomorrow. We have FOMC tomorrow afternoon, so we'd likely to have a little bit of movement in the morning, and then things could slow down right before the FOMC meeting announcements there. Wanted to show the gap chart here. 60-minute. This was showing you that gap was filled. We gapped up, kind of trickled off yesterday, and then today we opened up here, kind of moved up to the 60-minute moving average, and then proceeded to come back down. Now, we did not take out this low yet. So we had a lot of good potential to do a good push down there to take out that low, but as of now, we have not. So we do still have these other gaps below, quite or a few gaps below that still need to be filled. But as of right now, we have not taken out that low. Possible that we could have further downside. Given this, if we do have further continuation off of this, we could have a further slide off in the markets tomorrow. However, and I'll also show you on the when I get to the internals on the VIX and I show the SPY chart, we'll relook at that. Okay, that's where I'm going next. So on the internals, I did think this was interesting. On the VIX, we moved up quite a bit in the VIX here. From yesterday's close down here, then we get a gap up and move up quite a bit significantly. However, switching back over here to the daily, you notice on the daily, we didn't really get pushed that hard to the downside. So the VIX had quite a bit of move, and yet we just kind of printed this inside bar here. Matter of fact, I did want to show this. I measured this out earlier. We basically only did about 50% retracement of that. And then you see that during the Asia session overnight, they went ahead and retraced to it. So, we did about 50, I guess we did 61.8, in the market there. Asia did a little bit test below that 61.8. Now it's, in the process of moving back up here. So, this is just something I'm keeping an eye on, guys. I think we could move down here towards these lower parts. I think we can move back up towards the upper section here. I'm not really going to play this middle just because I think we're going to get a lot of, crosswinds potentially here. So I'd rather play, the lower end or the upper end, or at least that's what my thought is right now. Okay. Let's see. That's the daily. Let's go back to those internals, showing that, big move up, but not a lot of move in that price. Now down here on the SPY chart down here, let's see if I can move some of this up here. Let's show you this. Yeah, so this is the SPY chart here. And I just thought this was interesting. We've made this move up, made the move up here and that. Pardon me. Started to fail, tried to push back up, failed again, tried to push back up. Matter of fact, left a tail up here. And then today we failed once more. So, this is interesting. If we open up anywhere down in here, pardon me, we could see a little bit further weakness just based off this red, green, red, green, red. But again, I'm not ruling out that potential to the upside just based off this daily uh, daily chart here on the LBR and the fact that we've bounced off that 20 period moving averages. So again, I don't know if we're going up or down. I just know that overall we are still in that that pattern of the box in the three bar range and things like that. All right, I think that's it, guys. That's all I have for tonight. So we will uh I'll correct this a little bit later, but anyway, yep, that's it. Happy trading tomorrow. We got FOMC tomorrow afternoon, as I said. Also VIX expiration tomorrow. Tomorrow's Wednesday. It's a VIX expiration. No need to do anything on your charts for that. Usually, again, you get that VIX acting a little bit squirrely a day or two before, or even the end of last week. You can kind of have that leading into the VIX expiration. So, all right, we will follow up tomorrow. Thanks, guys, and we'll talk again soon.